Let me be blunt here. If you're investing in crypto and you're currently in the red, you're making two major mistakes. Everybody that is investing in crypto should be in the green right now. If you are not, this video is for you. Let's dive right in. This is going to be short and sweet. Basically, when it comes to investing, you have two choices. You go either with a lump sum investment or a dollar cost averaging strategy. Lump sum is you take everything you have, 10,000 bucks, you put it in, you don't look back, that's it. And dollar cost averaging is time intervals, daily, weekly, monthly, into an investment. My recommendation here, the higher the time interval, meaning daily, better than weekly, weekly better than monthly. Short legal disclaimer below. Dollar cost averaging actually works, and it works better than you might think, because let's just say at the last Bitcoin top in November 2021, a friend of you approached you, he said, hey, this Bitcoin thing, you need to invest. You took some money and you put it in there. If you would have done a lump sum approach, meaning let's just say you put 1,500 bucks into this thing. Now, only 750 would be left, meaning you're down 50%. Let's just say you choose a dollar cost averaging strategy and you put in $10 every day since then. We had about 150 days, meaning this is how the graph would look like. So in this 150 days, you would approximately have invested 1,500 US dollars as well. But in this case, you're actually in the green, you're up, you're in profit. And not just a little bit, with 1,520 bucks invested, you would have 2,200 bucks with a dollar cost averaging strategy. Daily better than weekly, weekly better than monthly. And in general, dollar cost averaging is better than lump sum. If you're looking for an app where you can invest on a daily basis, I put a recommendation at the pinned comment of this video. It's about 1% fee you're paying there, and a great way to establish a long-term dollar cost averaging strategy. Major mistake number one. People choose to go lump sum instead of dollar cost averaging, or they stop their dollar cost averaging. So they're just buying in the FOMO phases of the market, and as soon as the market turns, they stop dollar cost averaging. But especially in times like we are in right now, you want to double down. Especially within the last 2 months, you had a great opportunity to buy Bitcoin at a cheaper price. So mistake number one, people don't follow up on their dollar cost averaging strategies. Now, mistake number two, and I'm very, very sorry, but I'm gonna step on your toes right now, because for probably 80 or 90% of you that are in the red and maybe are following a dollar cost averaging strategy, this is the mistake you're making. So out of the top 2,400 coins that are on CoinMarketCap, this is the Bitcoin price, and these are all altcoin prices. And almost every altcoin out there, probably not yours is an exception, they tend to underperform Bitcoin. Out of 21,000 altcoins, only 3 of them managed to make a new all-time high against Bitcoin 4 years or longer apart. And these were BNB, XRP, and Doge. All other altcoins, even Ethereum, underperformed Bitcoin over time. Don't pick it up with me. I'm just a messenger. This is just the data. So altcoins are practically split in 2 different categories. One are the generators. So this means an altcoin that consistently trends down against Bitcoin. Approximately 90, maybe even 99% of all altcoins fall in this category. And then you have what we call oscillators, and these tend to move up and down over time. For example, Monero, Litecoin, and Dogecoin are 2 good examples, or 3 good examples to fall in this category. So what is the mistake that you're making? The first mistake is you're not following a good, solid dollar cost averaging strategy. And the second mistake is you're probably overexposed in altcoins. And in a bull market, it never seems like it's a bad thing to be overexposed in altcoins. But as you might have noticed, in a bear market, it does, because usually altcoins bleed heavily into Bitcoin. Just when you make a comparison how that was in the last bull run and bear market, the top 10 coins on average lost more than 90% against Bitcoin. And Ethereum is one of these coins. Ethereum, XLM, XRP, Cardano, they tend to lose 90%, some of them 96% against Bitcoin, and not all of them are coming back. So just to sum it up, if you want to have a good long-term solid strategy, increase your Bitcoin position sizing. It should be at least 50% of your total crypto holdings. If you're investing in crypto and you're holding less than 50% in Bitcoin, improve your Bitcoin, increase your Bitcoin position. And the second thing, follow a daily or a weekly dollar cost averaging strategy. Press the top link in the comment of this video to get a platform where you can set this up. So with that said, we are almost at the end of the video. I just want to recommend you one thing. Please consider subscribing to the channel. I know I probably stepped on your toes, and you probably are not happy with the things that I said, but I'm just trying to build a sustainable future for both my subscribers and myself. I have a very conservative approach. I like to minimize risks and maximize return at the same time. And just a thing to consider, because crypto people are completely delusional when it comes to investing. They think 100x or 1000x is something that is normal, which it isn't. Like 30% a year is very, very solid. And you know, there is still a lot of gains to be made in Bitcoin. And what you don't want is you don't want to blow up. And the most investors, they fail to reach financial sovereignty, financial independence, because they overexpose themselves into risky assets and lose it all. You don't want to be one of these guys, so take a risk-averse approach. Increase your Bitcoin position. With that said, thank you for watching the video, and I hope I see you next time.